Buy or sell PepsiCo. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So this stock is found under a theme that I called Dividend Stocks. 31% average from the 52-week low and minus 11% pullback so far. So here is PepsiCo. It's in soft drinks and snacks. 37% from the low, and it is at 52-week highs. So here is the company's website. So when you just go into their website, it is not really clear what they are into, but obviously this is a company that doesn't need a whole lot of introduction. So let's here go to the brands, just, to see sort of how diversified they are. So you see that they are showing here their juice, the Quaker Oats, Lay's. So you see that what they put here on the front page, well, not the front page, but on the top of the page, it is clearly positioning themselves more in towards the healthy end of the spectrum. So that is interesting. That is a tactical decision for them, and might be a hint about where they are going in the future. Pretty darn strong. So the bulls are currently very much in control. Looking at the daily data points, bulls are in control. So all things point in a very bullish direction so far. But when we do this, and we look at what usually happens when we have these kinds of technical readings, and of course all the data you see here is based on big money being pushed in and out of the stock. So look here at the RSI. So the current RSI is the same that we had back here. So in this instance, let's measure it. So let's say that you used the RSI to get short here. Then you would initially have it go 13% against you. That is a lot. But here you would have a minus 22% gain. A 13% stop is obviously way too wide, but in this instance, we did see that it went higher. So let's go even further back here. So let's look at this time when we had a similar RSI level. That was here. So let's measure what happened in this instance. So here, initially you do have a minus 9% pullback, then you have a 4% rally, and then you are looking at an 18% gain as a bear. And also here, look also at the distance from the 20-week moving average, 50-week in green, 100-week in blue, and the red 200-week moving average. We are at a very extreme level. That from a risk-reward standpoint has been more beneficial to the bears. So here is another time where we had, the similar RSI level to what we have now. That is here. So let's measure. So you had it here. In this instance, you had a very shallow correction, which would be approaching, 5% gain for a bear. Here you have the RSI we currently have, and then you did get a maximum of minus 24% gain as a bear. Obviously, that is pretty darn good. So if you look here, big picture. So now we have data that goes all the way back here to the early 2000s. If you look at the RSI level, the vast majority of the time, we didn't go higher on the RSI. Same thing with the distance from these moving averages. The current reading is very, very extreme. There's been only a few times where it made sense to look at the current readings and be like, oh, I should go long PepsiCo. The vast majority of times it was much more prudent and profitable to go bearish. And also here actually in 2014. The MACD has hit an extreme reading, so there's a lot of extreme stuff happening. Looking here at the daily data points. Yeah, it's a very similar message. What I do find bullish here though is that accumulation is still made a new high. So there are definitively buyers. But I think the people who are buying PepsiCo here, given what I just mentioned, it can't possibly be, the super sophisticated money. So if we look here at the seasonality for PepsiCo over the last 5 years, Then January has been, it closes higher 80% of the time, but it usually actually have a loss. February is a pretty weak month. Over the last 10 years, then January and February are some of the weakest months. And over the last 20 years, January is the weakest month, and February is also a weak month. That substantially increases the probability that a bearish thesis will work out. Looking here at Finviz, we are testing this resistance line that has triggered sell-offs multiple times in the past. If we go here to Sachs, they have a number for sell on PepsiCo. C value score, A growth, D momentum, industry rank bottom 35%, soft drinks. The dividend is 2.45%, so even though it is a dividend stock, the dividend is not so huge that it is like a nightmare to go short. Especially at high levels, because there is an inverse relationship between the dividend and the price of the security. When we look here at the insiders, we do see that there's been more accumulation, bullish buying than selling, but we haven't seen any moves here in 2022 so far. But the insiders, they are bullish. When we look here at the consensus estimates. Okay, so there's 22 analysts covering the stock, but the average price target is minus 1% below the current price. The highest target is 14% above, and the lowest is 17% below. So I would say that this is more bearish. Looking at the correlations, long term, 89% with the S&P 500, 82% with the PBJ, which is the food and beverage ETF. Interestingly, there's actually a stronger correlation here with the XLP, which is the consumer staples ETF. 94% here, which is very, very strong. Minus 39% with the dollar index. Short term, we have 92% SPY, 74 PBJ, 90% XLP, and 84% positive with the dollar index. So given the very strong correlation here with the XLP, let's just do a very quick technical analysis of the XLP. XLP is the ticker. So looking at the weekly data points here, similar to PepsiCo, we do have extreme readings on the PPOs and the RSI, and also here the MACD. So basically, we are seeing levels that are not historically associated with more upside. Looking here at the daily data points, pretty similar message. We have gone up a lot. So yeah, and that represents risk. Yeah, for the bulls, because the bulls, in order for it to go higher, it needs other bulls, and you do get that greater fool theory playing itself out in practice. So to sum up my take here for PepsiCo at these levels, so the technical picture is pretty clear. Historically speaking, there's more reasons to be bearish than bullish. The seasonality also corroborates the bearish thesis. Also, the fundamentals do that as well. The only bullish thing here with the fundamentals really is that the insiders are buying still. So yeah, I think that taking it all together, there's simply more reasons to be bearish than bullish on PepsiCo at these levels. And that is what it's always about. It's about the current levels, and looking at the current levels in regards to the prior history of the security, and then make assumptions about the future.